Good morning, it's Monday the 27th of February and welcome to our regular Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis as always. So let's get straight to it. So the economic numbers being issued this week start today with the consumer confidence in the Eurozone and the US durable goods. On Tuesday, we'll get the latest GDP figures from Canada. On Wednesday, it's Australia's turn to release their GDP figures, the Chinese Caixin PMIs, which we'll discuss more about in a moment, German inflation, and the manufacturing PMIs in the US. Thursday sees an update on inflation in the Eurozone and the release of the latest ECB minutes. Both of those stories we'll talk about in more detail later in today's report. And also on Thursday, the US jobless claims. And to wrap up the week, the US released their latest ISM services PMI. And again, we'll give our thoughts on this towards the end of today's video. And the companies that we'll hear trading updates from this week start today with Associated British Foods. And they release a trading update, and that's something that we'll discuss in more detail straight after this. Monday also sees results from Bunzl, Li Auto and Zoom. Tuesday brings results from HP, full-year results being announced from Ocado, and that's something that we'll take a closer look in a moment, and results from Rivian, Target and Travis Perkins. And it's a busy day for results on Wednesday, as we'll be hearing from Aston Martin, Dollar Tree, Just Eat Takeaway, Kohl's, Lowe's, NIO, Okta, Persimmon, and finally Q4 results from industry spending bellwether Salesforce, which we'll examine in more detail later on. Thursday's busy too, with results from Beazley, Best Buy, Costco, Flutter Entertainment, and full-year results from ITV, which again we'll discuss in more detail towards the end of today's report. And finishing off Thursday, results from Macy's, National Express and Taylor Wimpey. And finally on Friday, we'll hear from AB InBev and Lufthansa. Well, last week, US core PCE, the Fed's preferred gauge for inflation, unexpectedly rose to 4.7% year on year. That was up from 4.6%, supporting the Fed's view that rates could remain higher for longer. We also saw stocks in the US and Europe selling off. And this week, once again, inflation remains a key theme, with Eurozone CPI inflation due and speeches from the Bank of England's Andrew Bailey, as well as the Bank of Japan's nominee Ueda. No doubt the prevalence of any more hawkish worries could continue to hurt demand for stocks this week. So let's take a look at this week's bigger stories in more detail. Associated British Foods are set to release a pre-close trading update at the start of the week, after the last statement showed that sales across the festive period rose an impressive 20%. Now, while this level of growth is not expected to continue, the business is expected to show ongoing resilience. Primark has said that it has increased its market share to 7% of the total clothing market. Furthermore, slowing online spending could also help Primark's performance and high street retailers bounce back. The business also reported solid growth on the food side, with sugar and ingredients seeing gains of over 30%. However, ongoing elevated inflation could pressure the margins on its grocery and sugar businesses. Ocado is expected to report a 2.5% increase in annual sales to £2.56 billion in 2022, when it reports full-year results on Tuesday. Now, while Ocado expects EBITDA to break even, the markets are less certain and believe it will post a loss of £59.2 million after a profit of £61 million in 2021, and marking the first play into the red in years. Its joint venture with Marks & Spencer's has expanded by around 40% since the start of the pandemic, but pace has slowed, and profitability is taking a hit owing to inflation and the need to invest in the tech side of the business. Well, this tech side, which sees Ocado roll out its automation technology to other companies, kept expanding in 2022, ending the year with a deal with South Korean giant Lotte Group. The share price trades 3% lower so far this year and 55% lower over the past 12 months. Salesforce, which is often considered a business spending bellwether, is due to release Q4 earnings after the close on Wednesday. Wall Street expects the cloud-based software company to report earnings per share of $1.36. That's a 61% increase year on year. However, investors may pay more attention to the outlook, which remains uncertain. Earnings come as activist investors, including Elliott Management, continue to pressurize the company to raise productivity and rein in those costs. Well, Wednesday also sees the release of China's latest PMI figures. China's manufacturing PMI for January rose to 50.1, showing that factory activity expanded for the first time in 4 months, as the economy reopened after the end of strict zero-COVID policy. However, factories were closed for 7 days in February for the Chinese New Year celebrations, which means that manufacturing activity is expected to tip back into contraction in February, below 50 at 49.8. The US dollar CNH pairing is currently trading at a 6-week high. Well, the minutes of the February ECB meeting will be released on Thursday. The ECB hiked interest rates by 0.5% at the meeting, taking the lending rate to 2.5%. With inflation cooling but core inflation rising, and amidst increasing signs that the Eurozone could avoid a recession, investors will be scrutinising those minutes for clues over the future path of rate hikes. The market's currently pricing in a terminal rate of 3.75% in the third quarter. However, this peak figure has moved up from 3.25% over the past month. As a result, the minutes could well be out of date. And continuing the theme of inflation, the Eurozone is due to release its latest inflation figures also on Thursday. January inflation in the Eurozone dropped to 8.6% year on year. That was down from 9.2% in December. The sharp decline fueled bets that the inflation could continue falling rapidly over the coming months. However, core CPI, which strips out the more volatile items such as food and fuel, isn't reflecting the same trend. Core CPI actually increased in January to 5.3%, up from 5.2%. This is likely to be a worry for the European Central Bank, which could force them to continue raising interest rates aggressively over the coming months. So as a result, do keep an eye out this week on the Euro and the DAX. And finally, on Thursday, ITV are due to report full-year results, which are expected to show that the company has turned a corner in its long-term plan to reduce reliance on terrestrial TV. Its revenues from streaming and the studios business are expected to report double-digit growth and now account for more than half of total revenue. Chief Executive Carolyn McCall's vision to replace ITV Hub with ITVX was initially met with suspicion but has boomed since its launch at the end of last year. Rumours are also swirling that ITV could be broken up amidst reports there could be a deal in play for ITV Studios. ITV hinted that they could be interested in offloading a stake in the studios business to raise funds to help fuel growth in its streaming business. Expectations are for a 4.5% rise in revenue across 2022 to £3.6 billion. Pre-tax profit expected to rise 9.7% to £526.6 million, and the share price trades up 15% so far this year, but is down 20% over the last 12 months. And finally for the week, the US are due to report their latest ISM Services PMI. Well, US economic data has been remarkably strong recently, suggesting that the economy is holding up better than expected, despite ongoing interest rate hikes from the Federal Reserve. The ISM Services PMI has been remarkably strong in recent months, rising to 55.2 in January. The PMI is expected to slow slightly in February, easing to 52.4. In recent weeks, stronger than forecast US data has fueled bets that the Federal Reserve will hike rates higher and for longer, hurting demand for stocks and gold, while of course boosting the US dollar. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Diageo, Hargreaves Lansdown, HSBC and Barclay Group. And in the FTSE 250, we'll hear from Diversified Energy Company, Safestore, Capital & Counties, Ashmore, Scottish American Investment, JP Morgan Global Growth and Income, Personal Assets Trust, Rougher Investment Company, HICL Infrastructure, Genus, and last but not least, Hays. So there you have it. I don't think anyone's any clearer yet if we've reached peak inflation or not, with metrics across all the major economies sending up signals that are about as clear as news on the Ukraine conflict. The direction it's going depends upon who or what you read. Several economies still flirting with a recession. It's all a grand balancing act at the moment, which could potentially go in any direction. But the good news is, if you're an investor, the team here at Atlantic Capital Markets are pretty adept at keeping our clients upright on that economic tightrope. So do feel free to give us a call anytime. So in the meantime, even if you're not one of our investing clients, don't forget you can always try our app, delivering you our award-winning trading signals, which of course are free to receive and to use. Aside from that, thanks as always for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates, with of course our expert market analysis and our opinions. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.